This is part 2 of our Chapter 4 video lecture, really the Chapter 4 homework problem, where we're doing this requirement C, filling in the consolidation worksheet, especially these consolidation entries. Remember the SAIDE. So reviewing again, back in our textbook, the S entry, we'll do that first to get rid of the common stock of the sub, getting rid of the retained earnings of the sub as of the beginning of the year, and then allocating the total debits between the parent's share, in our case, Holland was 60%, and the non-controlling interest, which is 40%. So let's do that. Let's do that on my spreadsheet that I had started in the previous video. That's this one here. Yeah. So I set up all these columns. So let's get rid of the, well, before I navigate through this spreadsheet, let me move these percentages here to the top row over here. So let me insert another row. And I can move this without spoiling my formulas. Yeah, not copying, but moving. So I'll do that. Okay, so Holland owns 60% of Zealand, and the non-controlling interest owns 40% of Zealand. And let me lock in my columns here in case I have to scroll down. I can always see the top labels up here. So that's view, freeze pane, both the first column and the left column and the top rows here relative to where my cursor is right now. Yeah. So again, if I scroll down, I can see the headers at the top. And if I scroll off to the right here, I can see my first column, column A. Okay, so entry S. So this is the stock of Zealand, this credit balance of 100,000. So let's get rid of that. That's entry S, and that's going to be a debit. So let me just minus this negative here. And you know what? I'm going to put a total in all of this columns here, some of which I have to modify or delete later on. Yeah, but let me go ahead and enter it so I know eventually when I try to cross-foot against this row here for the common stock, it should be 0. So let's see, the sum. Yeah, let's do the whole sum here. And again, it's probably going to be incorrect for some of the columns, some of the rows, but I'm going to fix it up later on. So I copy the formula down. Okay, and then you can see here really the correct balance after using this entry S. Yeah, it should be 0 for the common stock of Zealand. So that's one debit. And the other debit is not to zero out retained earnings at the end of the year, but the beginning of the year for Zealand. So that's another S entry. That's a debit. Yeah, debits are positive numbers. Okay, so that's only leaving the retained earnings for the parent. Now I add up the two, and I'm going to allocate it 60% to Holland, offsetting the investment in Zealand, and 40% to um, a non-controlling interest, which is not even showing up yet. So let me insert a new row for non-controlling interests. So that should go near the common stock here. Common stock. So let me insert a new row here. I'm going to just move these two rows down and then insert a Non-controlling interest, that's reminding me here, it's the 40% not owned by Holland. Okay, so the offset is to the investment in Zealand. Right now it's an asset with a credit balance, debit balance. So I'm going to credit. That's the sum of this amount plus this debit. So there's your total debits. And I'm going to multiply that by 60%. So here is Holland's share. Oh, I have it. I should put it. Where's my credit column? I think I need a credit column. Credit. This should go in the credit column. And because credits are, like here, negative, I need to change the formula to show a negative, a minus. Okay, so this represents 60% of the total here. And I need a 40% now going into this new row I've set up. Remember, this is not really an account. It's just a row on our consolidated worksheet and financial statement. In fact, let me copy the formula down here. And we're going to put in that 40%. And it's a credit, so a negative total of this debit plus this debit, close paren, multiply by 40%. Okay. And just to double check, this is entry S, the same first entry, yeah? Same first entry. We'll have everything aligned right next to the numbers. Right align. Okay, it's not. It's think I'm entering a formula here. Right align. There. And just to double check, I want to make sure my total debit consolidating entries equal total credit. So let's put a total here at the bottom. Alt equal. And it's not just that one number, but the whole column. And enter. And let's duplicate this formula on the credit column. And just to double check my total debits equal total credits, right here in the middle, let's add up the two totals. A positive plus this negative. Yeah. No, again, plus and plus. So it should always equal 0 after I finish at least each entry in the debit and credit consolidating entry columns. Okay, so I think I finished my S. And again, that's this entry here, yeah? So let's do consolidating entry A, keeping in mind you're doing this as of adjustments at the beginning of the current year, not at the date of acquisition. So in our case, we have equipment being increased, a patent cost being increased, and then goodwill is going to be a separate entry A, entry A2. And then we're going to reduce the investment account on the books of the parent and increase the non-controlling interest, that new row we set up on the worksheet. So the assets we need to add in. So are these two over here. But keep in mind, this is the adjustment at the date of acquisition. I need to reduce it for 1 year's worth of amortization. Remember, this was at the beginning of 2023. And right now, we're looking at the beginning of 2024 balances. So 1 year's worth of amortization has to be reducing this balance over here. So let's use these two amounts here and amortize it out. So I need to know the life of the equipment and patent, remaining life. So where is that now? Here in the problem. 5 more years for the equipment, that's the 55,000, and 10 more years for the patent, 5 and 10. 5, 10. So this is the life. We're going to divide the cost by the life to get the, I'll call it amortization. Or the equipment should be depreciation, yeah, per year. So 55 divided by 5 and duplicate the problem. Okay. So at the end of the first year, at the end of 2023, we start off with this cost and less 1 year's amortization. So this is really the January 1st, 2024 balance. Taking the costs and minusing just 1 year. Of course, each year it's going to get bigger and bigger, yeah? The accumulated amortization or depreciation, leaving a smaller net value. But this amount here is the adjustment I need to get at the beginning of the year for the equipment of Zealand and the patent for Zealand. So we'll call this adjustments A1, 1, yeah, right next to each other. And I'm going to increase it, debit, so equal 44, and then just copy it down, Control D for the next one. As you can see, the balances are increasing here. So that's half the debit side of A1. And the credit side of A1 is to reduce this. Let me bring in the parent column to reduce this investment for 60% of these two amounts and increase the non-controlling interest by 40%. And notice I don't have enough room. Everything is going to be squished into this one row. So what I'll do is just make another row by just moving everything down here. Yeah. So it kind of looks like the book. So let's see if I can bring back my textbook here. My textbook, and if you look at the journal entry here, you can see it takes up more than one row here, yeah? How about this one? Non-controlling interest. I guess these two amounts here, yeah, for this one account. Let me go back again. What we really are doing is this control premium situation. And in the case of consolidating entry A, we have really two A's. A1, which we're doing right now, you know, 60, 40. We don't have any adjustment to liabilities. In our case, the equipment is more debit, not a credit. And we're going to save the allocation of goodwill for A2. Yeah, but let's finish off these two amounts. Add up the debits and 60% to Holland and 40% to the non-controlling interests. Let's bring back my spreadsheet. So, I think I need another row. See, I'm already using up this cell here. I need another credit. So again, let me move everything down one row. I don't want to insert a row because that would disturb my rows over here, yeah? So I just drag it down. And I'm going to have a A1. Let's write a line here. And that's a credit, so a minus. Taking the sum of these two debits here. If I can get to it, where am I? Here's the second debit. Close paren, multiply it by 60%. Let's see. And then the other one is over here, yeah? A1 credit, that's a negative. The same two debits here total times the 40%. Oh, before I enter it, notice my debits and credits here are not balancing it. This number should be 0, yeah? To indicate I have equal debits and credits in the adjustment column. So enter. Okay, I know I'm probably on the correct track. I definitely know I'm wrong if this is not zeroed out here, yeah? So let's do the A2 entry. So again, going back to my reference, my textbook, A2 is to put in the goodwill, but because there's a purchase premium, I cannot do it like this previous one, the 80 for controlling and 20, oh, really 60 in our case, yeah, for controlling and 40 for the non-controlling. But you know what? The amounts I need, we've already did it in a previous part of this problem, which is, okay, I didn't save my answer here. I should have it on my spreadsheet though. Let's bring up my spreadsheet. Remember this goodwill of 140? We already did the allocation between, where is it? Between Holland's controlling interests and the non-controlling interests. These two. And it's not going to change year to year because we don't amortize the goodwill. Of course, it may change if there's an impairment. I think we learned about that, if I recall, at the end of the previous chapter. But let's go ahead and book this goodwill of 140,000. So that's a new asset. Not here, right? So let's make some room for that asset. So adding another row. And goodwill assets are recorded with debits. Debit, let's see, the 140,000. Let's put it in our consolidated total here. As you can see, these two eventually have to be combined with this area, debit, credit, eventually to zero out the asset, the investment. Well, I'll do that later. Okay, so I got the A2, and now I have to allocate it to the controlling interest. I need another line here, yeah, to offset this asset. A2. And it's going to be, I could just take, well, I cannot just take the percentage, yeah. Remember how we did this calculation on here because of the premium? So what goes here is the 120. That's Holland's share. And the other 20,000 will go to the non-controlling interest share. And I need another line here. A2. Do my debits equal credits? Something is wrong. Can you see the problem right here? This is a credit. It should be entered as a negative, you know? This is a credit. It should be entered as a negative. Okay, I'm balancing. So what's next? We did the S, we did the A, both A1 and A2. So now we need to do the I. I is the income. Income. This income here, this earnings, 42,300, we gotta eliminate it because we don't want to duplicate the income over here when we do the consolidations. So let's get rid of this credit with a debit. This is entry I for income. So tell me, what's the offsetting credit? Can't remember? Again, use your textbook as a reference if you can find it. Here's my textbook. Here is entry. I got to go back to the bigger example here. Entry I, offsetting the investment asset account. This is probably the simplest journal entry, or really consolidating entry. And that is this asset here. And again, I need another row. So let's move everything down one more row. Entry I. This is a, this is a debit, right? Because remember, this is a credit. I'm offsetting a debit. Okay, I need a credit. That's right, I need a credit. This credit is really reducing this debit balance here. So I just add a positive amount here. I'll just copy this number here. You should really go back to the original, where the original amounts are. So in case this number changes, automatically the formula will update. In case I know I'm pretty much balancing here, yeah? Sorry, credit minus, yeah? Now I'm balancing. Can you see why I put this here? I always know whether probably I'm entering it as a positive or negative amount. Anyway, debit's always going to be positive, right? Credits in this, always in my spreadsheet, going to be a negative. Okay, so that is I. So the next elimination is this 30,000 dividend. But we're not going to zero out the 30,000 here because we need to keep track of what's going to be allocated in terms of profit and dividends to the non-controlling interest. We're going to use both of these two columns here to zero out this 30,000, just leaving the parent's dividend here in the consolidated total. Okay, so this is D. D for dividend. We're going to be crediting this debit balance only for the 60% interest of Holland, the controlling interest, and leaving the 40% over here, not as an adjustment, yeah, but just as a carry over to this column, eventually reducing the amount here to 50,000. Okay, so credit, I know this is a negative. I'm going to take this, all of this 30, but only 60% of it. Okay, let's see. And then the rest of the 30 goes in this column. So I'm going to take, let's see, that's a debit though, yeah, positive. So equal the 30 plus this 18. And let's see. Now this formula here, this one should be the 50. What do I have here? Add it up, minusing, this one should be minusing the 12,000. Yeah, I'm really taking it out, yeah? So I gotta modify this formula. Let's redo this formula. I'm gonna recheck all my formulas here in the last column later, yeah? I'm gonna sum all of this over here, except the last one here, which I'm going to minus out that 12. Yeah, leaving only the 50. Yeah. In other words, parents' dividends, consolidated total dividend. I need to, you notice I'm not balancing, yeah? So what am I debiting to offset this credit? Okay, we learned in the previous chapter, it's the investment, actually making the investment here bigger, this asset. And I need another row. Entry D, positive, yeah, debit. I need the, let me minus this negative here. Am I balancing? Yeah, 0 here. Okay, so that was entry D here and here, leaving this balance, reducing, this is the debit now, the non-controlling interest, yeah, which we eventually will total at the bottom, and then include that total in the consolidated financial statement. Okay, last entry E, yeah? E for expense, really amortization, 1 year's worth. And that's the amounts we figured out over here, yeah? Depreciation, amortization. Depreciation expense, right here. E, positive debit, equal just the equipment. This amount. And then the amortization. And the offset is accumulated depreciation or accumulated amortization, really netting it out of the asset itself. Yes, net means it's subtracting out the accumulation. Yeah, so the E here and here, and of course that's a credit, a negative, and I'll just duplicate these debits here. Here I can just copy it down to the next row. Double checking my balance is netting out to 0. So let's go back to the top of my spreadsheet here and see if I need to adjust any of the formulas. So I want to figure out the consolidated net income. So it's not adding across here. You see these two? I cannot just add these two and get this incorrect total because it's not taking into account these adjustments here. So I'll just foot this down to a new total here. Let's get rid of that bad answer and put in a new total here. So the consolidated net income is 240,000. Again, parentheses is means credit balance, yeah, net income, and not these two. I guess I could have a footing of this adjustments and then foot across. I should get this here. But, we zeroed out the earnings from the sub here. Let me get rid of this blank. So let's fix up this retained earnings statement here. So we zeroed out the beginning retained earnings of the sub and only carrying over the beginning retained earnings of the parent. We have to do the same thing with this net income. Again, we don't want to duplicate the sub's net income because we're including it here as the calculation of the consolidated net income. So this net income for the consolidation is going to be just the parent. And this adjustment is subtracting just the parent. I guess I can foot this down here. Well, let's just add in just the parent's numbers, yeah? So we learned in a previous chapter, whatever you see here under the parent is going to end up as the consolidated totals. Okay, let me get rid of this blank. Well, before I move on to the balance sheet accounts, I need to reconcile this net income here. Even though I know this number here is going to match this, this is the consolidated um, net income. And we need to allocate part of this to the non-controlling interest, which I pretty much know is going to be the difference between this number and this number here. Again, I'm getting that amount from here, yeah? Because I know all of this has to match over here. But I want to reconcile, I want to double check how much to allocate to the non-controlling interests. So we're told here in chapter 4 to set up really another calculation. So let me do it. Let's do it over here. So I want to get the sub's net income, Zealand's net income, because 40% of this goes to the non-controlling interest. Not 40% of the consolidated total, yeah? 40% of this, of Zealand, goes to the non-controlling interest. So let me grab that net income. I think it's a negative, yeah? And it's 40% of this. But do you remember? We gotta adjust the depreciation and the amortization for the additional amounts we had calculated. So let's call that additional depreciation and additional amortization. So that's a expense debit 1 year's worth. So if I total this, three numbers, this is the subsidiaries adjusted net income, of which I take the non-controlling controlling interest 40%. So I take that and multiply it by my 40% here. So this is the amount of net income of the consolidated group I'm going to allocate to the non-controlling interests. So where is my net income? Here. And income is credit. So I'm going to take that negative amount here and allocate it, including this dividend, yeah, to the non-controlling interest. So I got to reduce this consolidated net income by what we allocate to the 40%, leaving this 60%. Let me just double check if it comes out to the same number. I actually got to add that negative number, yeah? Let's see, so minus the negative. And it matches it. So this number got to match this. Again, all I did was copy the number off to the left column here, yeah? But I've reconciled it by going through this calculation down here, allocating to the 40% and minusing it out of the total consolidated group net income. Okay, so I know I'm on the right track here. Okay. So consolidated non-controlling interest income, non-controlling interest dividend, combined with the beginning of the year, that would be these amounts here for the non-controlling interest. I'll do that later. Let's keep on going down here. So I just finished this retained earnings here. Let's see. So this is zeroed out. Let's go to the assets. So current assets just added straight across. This investment, not just this one row, but combining all of the adjustments here. So let me redo the formula. Sum, and then include everything in these rows here. And what do you think the answer should be? Huh, I forgot this 18,000. We know it's supposed to be 0. Wait a minute. My formula, equal sum paren, cells to add up. And just enter. Okay, that's your control, right? Got to be 0. You cannot own yourself. Property, equipment, let's see. Every year, this adjustment A1 is going to go down because the carrying value, remember it's being amortized. This adjustment E should be the same every year, at least for that 5 or 10-year period. The goodwill adjustment should be the same every year unless there's an impairment. Remember, we don't amortize goodwill like these other two assets. So total. Right now, my total formula here is adding across. Really, I should be adding downwards because, again, I'm not adding in all of these adjustments to these amounts here. So let me redo this formula. And let's see if I can just drag over. And then notice the blank cell hit the bound. That's where I want my total. Yeah, Alt equal 2 million assets. Of course, I know my equity and liabilities down here should total up to 2 million. So I know there's some work I need to do on these totals over here. Let me clean this up here. So this non-controlling interest, again, this new rows we're inserting is not just this one amount here. Let me get rid of that. It's really all these three amounts. This is, if you add all this up, this is the non-controlling interest at the beginning of the year, to which we're going to increase it by the earnings allocated to the non-controlling interest for the year and the dividends for the non-controlling interest for the year. But let's get this total right here, summing up these three amounts. Should be a credit balance, yeah, negative. Okay, so that's the beginning of the year. And we're going to add in the earnings for the year and the dividends for the year for the non-controlling interest. And that total, I'm going to put here on the consolidation as a credit balance. Equal sum. And let me just add up all these three numbers. Total 315 is the 40% non-controlling interest in the equity of the whole consolidated group. And the retained earnings at the end of the year, you shouldn't include this. Remember, whatever is in the parent should be on the consolidated group. So let me see. Should I add this way? No, I got to add a cross, yeah? So just this credit over here. And my total liability and equity, of course, got to match this asset, but this total is being footed across here, yeah? I really should be footing downwards here. So let me change the formula, including the liabilities. There we go. Assets, 2 million, equal liabilities plus equity. So somewhere here in this worksheet, all of this adjustment column, consolidated entry columns, and the total columns is what you need to enter in your problem worksheet. Yeah, over here. Okay, so what you gotta do is fill in the applicable cells here based on what I've just shown you, if I can find it, here, yeah, in the adjustment and the total column. So let me just demonstrate a few. I wonder if I can copy and paste here. So this number, really, I have a formula, yeah? But I think when I paste, it'll copy the number or paste the number for total. And of course, if you haven't done the spreadsheet, you can just copy it off my video here. Let's do a little bit more harder one here. Net income, consolidated net income. Consolidated net income. Credits are negative. Where's my cursor? Here. When you enter numbers here in this credit column, keep it positive, yeah? Unlike my credit column here, I showed it as a negative. But let's just check already. Remember, you have infinite attempts of using this check my work button. We're looking for green check marks. So let's continue. Return to question. How about where, for example, the asset here, investment in Zealand, you have only one row. So what you're going to do is combine here, investment in Zealand, all of these rows. So if I drag over it, here's the total credits. 580,500 credit. Enter it as a positive. 580,500. There's also a debit here. 18,000. Again, going to the investment account. 18. Of course, all of this is to zero out the investment account. So let's double check that. Okay, so I leave it up to you to fill in the rest of the blanks here. Let me go over this one more time, yeah? So you can see all my entries here, especially the consolidated adjusting entries here, the credit, debit, and credit column. This non-controlling column is a little bit tricky, yeah, including the amount down here for the beginning of the year balance in the retained earnings for the non-controlling interests. And of course, just adding across to get the total column, making sure total assets equal total liabilities plus equity, just like you learned in your first accounting class. Okay, that's it. Okay, I'll talk to you later.